If you don't understand what is in front of you right now, then you probably won't understand what is even this right now. And I'm gonna show you how I use this exact model and this exact thought process to make profits like these. And I'm gonna do this step by step, so there is nothing unclear by the end of this video. So let's get started. Alright, so the goal of this video is gonna be for you to learn to apply my strategy in the live market. So you're gonna learn to use it every single day because it's dumb, simple and proven. And of course, you're gonna reach the level of profitability and consistency. So let's start with the step number one, and basically just what is this on the screen right now. So this right here is a structure. So S stands for structure, and basically if you don't know what structure is, that is basically market making a move to one side. So you always, if you ever enter the chart, you could see that market was making moves either like this or like this, and then back and forth like this and this. And what does that stand for? That stands for structure, because market is pushing either to the upside or either to the downside, and we are always going to mark those moves as a structure move. So this is a structure. Then the next step is going to be a correction. So market is a basically balanced thing. So whenever market creates a structure to the upside, it will need to rebalance to the downside before it makes another structure to the upside. So structures, S stands for structure, C stands for correction. So we are going to always have corrections and structures in the market like this. If we are trending to the upside, it's gonna look something like this. So something like this. And if we are trending to the downside, we are going to have structure to the downside and then correction to the upside. And basically this is a normal market movement, as you're going to see later in the video. So we have a structure and we have a correction. We can go to the next step, which is again structure. So as I told you guys, you are going to have structures, corrections, and then structures again. It's important for us to realize basically where the momentum is of the market, because momentum is always going to be on the structure side, on these two sides right here, because structure is being made to the upside. As you can see on this example right here, it looks something like this. So we have structure to the upside, correction to the downside, and structure to the upside. So how are we going to use this to our advantage? So if everybody knows that market is going to the upside, how are we going to capitalize on that, and how are we going to take a trade? Cannot we just enter into longs to the upside and make money? So that's where the next few steps are going to come in. So as you can see, we have structure right here, and then we have correction, and then structure again. And on this bottom of the correction is something called liquidity, and probably a lot of you heard of this term, but liquidity is basically stop losses. So I want you to imagine a lot of people that see that market is going to the upside like this, and it made a little correction, and they still see that the volume is towards the upside. So they enter a trade somewhere, let's say here. Market started to push to the upside, so they saw that, and they just entered the trade right here. And where do they put their stop losses? They put their stop losses below the last swing point, and that is this little correction move. So a lot of people, and I mean not a lot, but millions and millions and millions of people are going to put their stop losses on this low. And what is that basically for us? That is a liquidity, because market cannot operate without liquidity. Market needs to stop somebody out for market to continue going some direction. So if the market basically if a lot of people enter the trade here, put their stop losses below here, we want to see them get stopped out, because you guys know 99% of people lose money in the market. So we are always going to need some kind of stopping people out so we can enter the market. And that's basically the next move. And you can see we mark it out like this. We just mark it out with a baseline, and that is our liquidity. And the next move, which stands as M, is going to be a manipulation. So M stands for manipulation, and you can see that market actually stopped making structure to the upside like this, manipulated all of the people out right here, which basically stopped them out because people have their stop losses right here. So you can see stop losses right here, and market wicked them out like this. So everybody lost money, like millions and millions of people just got stopped out. Everybody lost money, and banks did this move on purpose. Like banks actually pushed the market to the downside so they can massively buy into the market. And what happens right after the manipulation leg, we are of course here going to start capitalizing. We are going to enter trades, but how exactly are we going to enter the trades? We are going to use a term that I'm going to explain you even more later about imbalance. So if you ever saw the market movement, you are always going to see that the market is, let's say, reacting a lot off of some kind of imbalances like this, and it is always pulling back to them and reacting off of them. And if we use that to our advantage, and you can see this is the imbalance right here, you need 3 candles. So first candle right here, second one, and third one, and you're always looking for this some kind of hole in between of them, which is basically wicks not crossing over each other like this, because there wouldn't be a imbalance like that. So we need to have this some kind of hole right here. And basically what everybody in the market is expecting is for market to go some kind of and retest this imbalance and basically continue with the market structure to the direction. So everybody is mistaking the manipulation leg, this one right here, for a structure phase. So everybody is mistaking this right here, which is structure, for manipulation. So everybody thinks that this was some kind of break of structure and that we are going to start creating structure towards the downside. So what a lot of people are going to do, they are going to put their, let's say, sell stops right here. So they are going to enter sell into the market right here. But what we are going to wait for is we are going to wait for a pretty sure entry, the one that is literally above 80%. And look at this, we are going to wait for a disrespect of this fair value gap. So we are going to wait for a close above the fair value gap, so we know it is disrespected exactly like this, and that is exactly where we are going to enter the trade, because we know that first of all people were stopped out right here, so a lot of stop losses right here. Second of all, a lot of people wanted to enter on the retest of this towards the downside and put their stop losses above here, above this zone, so stop losses here. And what the market did, market actually disrespected it, closed above this zone, and basically that is our sign to buy into the market. So we are going to enter buy orders right here, and we are going to target some kind of liquidity to the upside. And a lot of the time you are literally going to see this going straight to the take profit, because this strategy is literally such a genius, it's such a logical, and it just worked like a charm in the market. So let's just quickly go over everything once again. So the first thing is going to be, we are going to go either on a 15-minute time frame or a 1-hour time frame, and we are going to look for structures. So it's always going to be those 2 time frames for structure, and basically we are either going to go on a 1 hour. If there is nothing clear on the 1 hour, no clear structure, we are going to just scale on to the 15-minute, and that's we are going to look where the market is headed, and that's how we are going to know where we are going to trade towards to. So the next step is corrections, and we are also going to do that on the same time frame, but this time we are just going to mark out the liquidity. So we are either going to do a liquidity on a 1 hour time frame or a 15-minute time frame. And right now, of course, we know the market direction, which is clearly to the upside, because you're going to see these moves pretty obviously. We see a little corrections like these, where we are going to mark out where the stop losses are, where the liquidity is. After we mark them out, we can basically go down to the 1 minute time frame, as you can see right here, and we are going to wait for market to come down, sweep this liquidity, leave a imbalance in the market, and basically, of course, you already know it, we are going to enter the trade. So entry is always going to be on the last imbalance of the leg. So this is going to be on a 1 minute, and we are going to enter on a last imbalance of the market, and basically just wait for the close above, and that's exactly where we enter into the market and put our stop loss below and target some high to the upside. So this is basically the whole movement of the market, and this is how the market actually works. It's not some kind of stupid strategy about breakouts, this and that, but it is actually logic of the market, how people are getting stopped out. So if you came to this part of the video, I'm pretty sure you find something helpful, so please leave a like, subscribe, and just turn on notifications so you don't miss any newest videos. So let's go over some key rules that you need to trade this strategy. So first of all, you are always going to trade within the market open hours, and I personally do this on the New York session time, which is from 9:30 to 11 AM. You also have Asia and London. I would mostly suggest you guys trading either London or New York because they are the highest volatility market hours. So the second thing is going to be focus on only one instrument. And what I mean by instrument, I mean either focus on indices, forex, crypto, it doesn't matter, but focus on only one, because you don't want a lot of stuff to mess in your picture. You only want to focus on one and basically follow what the one pair, what the one instrument is doing. And trust me, it works on everything. But personally, I trade Nasdaq, which is called NQ, and it just works best on me there. So, and the last thing, there is also a link to my free community down there, and I'm also going to give you a complete free 10-page playbook about my strategy. I'm going to tell you exactly how you can claim it on the end of the video. But right now, let's go to the chart and let me show you some real examples. Alright, so we have a pretty interesting example in front of me. As you can see on the chart right now, we already did some stuff. And what I mean by some stuff, we did the structure part. So it is pretty simple to spot. And then after that, we did a correction leg. So this is a correction leg. You can see how this was a crazy big push to the upside. Then this was a slow retracement to the downside like this. And then after that, we had one more push to the upside. So we have a structure, correction, and structure. So we learned after we have these three phases that we are waiting for the manipulation one. So what do? As we said, we mark the low of the correction phase. So this is correction phase, so we need to mark the low out, and the low of the correction phase is this. So we mark it out like this, and we said that we want to wait for a sweep of this low. So let's just see when the market gets closer to that. Okay, so market is going down slowly, and there it is. Okay, so right now we are at the 1 minute time frame. So all we are waiting for is for the sweep of this liquidity of the corrections bottom. So let's see if we are going to get the sweep. So we are just waiting for it. Okay, looks like it came close, and there it is. There was the sweep, and I'm gonna go back to the sweep right here, even a little bit more. And what happened when we had the sweep? You can see that we left a beautiful imbalance right above here. So this is a imbalance I'm talking about, and if we inverse this imbalance, that's when we enter the market. So let's just wait and see, will it get inversed basically. And if it does not get disrespected right now, there might be a, let's say, one more manipulation leg, then another entry, and that's what sometimes happen, but it's most completely normal. I will find you another example where that happens. So looks like we just did one more sweep, and there it actually is close above the fair value gap. What do? We enter the trade, put our stop loss below, we actually scale out, and we put our stop loss all the way to this high. We can target the most recent high to the upside, and let's just see, will that play out like it should or what? And there it is, beautiful 2.6R. But let's just go to another example so I can show you, and you can gain a little bit more example and experience of this strategy. As you can see, we are at another beautiful example on the chart. So as you can see, we are at a 15-minute time frame, the time frame where we basically scout for the liquidity and for the structure. And as you can see in front of us, we have beautiful push right here, which is a structure phase. Then we have a beautiful correction right here, which is of course the correction, and then we have another structure to the upside like this. And of course, we said that liquidity is at the bottom of the correction, so we are going to just mark out this liquidity like this. And what are we gonna do? We are going to wait for a pullback and a manipulation of this liquidity. And what are we going to do? The time frame on is a 1 minute. So let's go to the 1 minute time frame. All right, on the 1 minute time frame, looks like we are getting pretty close to this area of the sweep. So let's just wait and see if we get the sweep. So we actually came pretty close, and there it is. This is the sweep. So what do after the sweep? We first of all, exactly when the sweep happens, we look for the last imbalance in the market. And as you can see, there is no imbalance in literally this whole area. So what are we gonna do? We are going to mark out this one that happened just before. So we marked out this one, and we are still waiting because maybe a new imbalance shows itself. So let's just wait and see. And as you can see right here, something just happened. A really small imbalance happened in the market. So literally look at it, how tiny this imbalance is. It is even harder to mark it out like this. And is this imbalance valid if we disrespect it? It is valid, but it is of course going to be a little less probability. So just for you, if you know, if this happens in the live market, if we get a tiny imbalance like this one, it is going to be a lot more low probability than a nice obvious looking imbalance that will be like this size. So just keep that in mind. So let's just see how does this all work out and how do we basically take this and execute this into the live market. So for example, if we were to take this small little imbalance, we would just execute it like this. But if you don't want to, let's say, take this small imbalance, what you can do is you can wait for the inverse and disrespect of this imbalance up here. So you can basically wait for this to happen and for you to enter a position up here and target something to the upside. And let's just wait and see. So this would be the first entry of this trade right here on the chart. We will of course scale out and target this high that just happened previously, and now let's just see how is it going to play out. So looks like right now it is going into healthy profits, but let's just see another entry how it would look like. So we still didn't get it, and there it is. So we got this another entry, and you would enter it of course on the close of the fair value gap right there. You would put the stop loss right below the fair value gap, and let's just see how will it look. We will of course target the same target, this liquidity right here, which is the swing high. And basically now we have two trades. So one is in very healthy profits, another one we just entered, and let's see how does it work out. And looks like it is going pretty nice for now. Let's just see, will it end up getting the full take profit? And yes, it actually did. So imagine if you took the both trades at the same time. This would literally be a 7 risk to reward, and this right here would be 2.75 risk to reward, which is amazing. So right now I'm gonna actually give you something for completely free. Before I give you that for completely free, just note that right now I am currently opening my very own private one-on-one mentorship. So if you want to get mentored one-on-one privately by me, there is some links down there that can probably help you. And there is of course a limited spots that are going to get pretty quickly. There is only 10 spots. So as soon as I release it, I probably think that it will get filled within few days. So if you want to claim the free 10-page playbook, all you need to do is literally go down there, join my Discord server, and inside of there you are going to be able to claim it for completely free, like completely free, no any tricks. And it is literally going to help you so much when you come to the live markets. You're going to pretty much be really able to trade by yourself. So that's basically it. I hope you guys liked the video. If you did, like it, subscribe on the channel, turn on the notifications so you don't miss out any new content. So with all of that being said, peace.